And good morning, good morning, good morning. Welcome, welcome, welcome. Welcome to another episode of Money Matters. My name is Nav, and today's episode, well, boy, we are super excited. So yesterday, I briefly just glanced over Bitcoin. It seems like every morning nowadays, you wake up and Bitcoin has broken yet another record. Will the bottom come? Will the top come? Are we going to crash? Where is this thing going to go? Everybody has a question. Nobody has a crystal ball. So we're all doing our best to predict based off of information we have at our hands. So today I will be doing the exact same thing. We're going to take a look at what's been going on, a little bit of a recap, a little bit of news stories of where this market is going, what's going on, what can we expect for 2021 when it comes to this beautiful brand new asset class called crypto. And we're going to be taking a look at where's Bitcoin going to go. Is it going to go up? Is it going to go down? I do think volatility is probably going to be a name of the game. I mean, we've seen it already this week alone. We've been up and down, and in a month we've seen some gains, absolutely insane gains. Very few and small sort of dumps, but of course it doesn't feel good when you buy at the top. So we're going to be talking about all of those different things. Hey, if you're brand new to the whole thing, welcome. If you're not, welcome even more. Do subscribe, do hit bell notification, do hit all, do like, do forward, help the algorithm, help you, and help everybody else. Let's promote the cryptocurrency projects and channels and help more people out there discover it, because based off of Google Analytics, they're not quite there yet. And unfortunately, they will join us when it's a little bit too late for at least this season right now. So we do have, I don't know, 6 to 10, maybe 12 months of insane gains potentially. And then after that, well, winter season is upon us. But before then, let's go in and reap on the gains. All right, y'all, let's do this. All right. Well, happy, I don't know, what is today? Friday. My gosh, where did the week go? Where did the week go? I don't like this. I don't like it. Next week, you'll be like half of January is done and over with. Can you believe it? I mean, the time flies when you're having a good old time, right? So we are having an excellent time here in crypto. And I'm like, oh my gosh, time is flying. It will be June before you know it, y'all. It will be June before you know it. We will be at 100, 200, maybe even higher per Bitcoin. We'll see how it's all going to play out. But let's not get too ahead of us right now. Let's go into the markets, take a look at what's going on, and let's go from there. How about that? How does that sound to you? Because it sounds lovely to me. Let's a little bit of a refresh, because it's been a while, and you know, things move when you're not looking. Holy mackerel. All right, y'all. Well, Bitcoin was not quite 40 when I woke up, and we're over 41 and a half now. $41,566.25. Thank you very much. Up 9.6% in 24 hours, up 43.1% in 7 days. Market cap for Bitcoin is $772.9 billion. So we've taken over vast majority of currencies right now. We've taken over vast majority of most profitable companies in the world right now. And like I've said, I think we're going to hit trillions, at least well over a trillion in this bull market. Is definitely going well above trillion, at which point, you know, companies can't they can't ignore it. So it's going to be an interesting piece, and we're going to be taking a look at some of the charts and some of the things and reasons why I'm thinking that maybe some of these like 100, 200, 300, $400,000 per Bitcoin in this bull market might be conservative. Crazy, right? So just a theory. Ethereum is sitting pretty at $1,266.56. It's up only 3.8% in 24 hours, but it is up almost 71% in 7 days. And we're going to take a look at the top winners of the day. And you will see here their hash graph is up 45%. Engine 42%, Solana 40, Nano 26, Quant 24, Decred 22.5, Avalanche 16, Verge 12. So we're having some really, relatively speaking, small coins, right? Especially if you look at the market cap, that are pumping like crazy, absolutely like crazy on the dumping end of things. We're seeing a few, not much of a dumping side. The only one that is in double digits is the graph, currently negative 13.4 for 24 hours and sitting at 34 cents. This is one of the newer projects, so it is much more volatile than anything else. But many people like me believe that long term, the graph does pose a really, really good long-term sort of a proposal and position. So we'll see how that plays out. One of the things that saying all of this stuff reminds me that I feel like I have to say, for my own, to protect the innocent, right? For my own protection, I have to say this. This is not a financial advice. You should not listen to anything I say. Do not trade based off of what you hear from a random dude on YouTube or somewhere else that you're watching this video, because you should be doing your own due diligence. And if you need a financial advice, make sure you find that from a certified advisor. There, I said it. All right, now we can play. We can play now. So, the graph, I think, has a really good and strong potential, especially in the long term. But the challenge is right now, I think that there's many people in the markets that are chasing yield. This summer we used to have DeFi chads that would go in and sort of pile into one thing and then pile out of it, pile into something else, and they're chasing yield. And, of course, you want to be in a place that makes money. But I think that that's the reason why we're seeing these sort of a much bigger dumps and stuff in the smaller markets, because it's a much smaller market, so it's much easier to move and manipulate. 100 people move 100 Bitcoin in and out of the Bitcoin at, almost $1 trillion market cap. You barely notice it. Like, the price moves a little bit and you barely notice it. But you do that in somewhere where it's a much, much smaller market and much tighter on the liquidity component, the market moves so much faster, so much easier to manipulate as well. So you definitely want to be careful when you're playing with that stuff. But for me, I like to look at the long-term gains and perspectives on the whole thing. So Graph is one, Loopring is another one that is just slightly under 10, Zilliqa slightly under 9, Stellar slightly under 8, and then we go into the 7, 6s and below. So overall market is up. Overall we are doing really, really well. Now, talking about doing really, really well, we've seen some challenges and problems, because what ends up happening when Bitcoin ends up pumping? Well, you don't even have to check the price. All you got to do is attempt to log into Coinbase. That's right. So Coinbase actually ended up going down, crashing on people. That's a very unfortunate piece, especially as Coinbase is looking to go and list on a stock exchange, right? Become a public company. I think this is going to have a potentially very negative effect on their stock and reputation, and the reputation of crypto as a whole. So it's not even about Coinbase, it's about the market as a whole. So I do hope that they will fix it. But from what I was able to find, they were not the only exchange troublesome yesterday, because all of the moves and stuff. Of course, people couldn't log in, and I don't know what I was doing, but I was like, oh, let me see what's going on, and I couldn't log in. I'm like, we're pumping. We're either pumping big time or we're dumping big time, because I can't connect, I can't get in. So that's an interesting piece to kind of pay attention to. But they were not the only ones. So Kraken reported some challenges as well. Bitfinex, I believe, was the same thing. Kraken was the same thing. So they're all reporting some of the challenges. And of course, as more people go in, I think the exchanges will definitely have to prepare that as these moves are coming, and boy, they are coming, they need to prepare. So one of the things of what Coinbase did, well, they actually looking to improve the Prime suite of brokerage tools for institutions, so it doesn't affect the you and I, unfortunately. And they have acquired Rootfire platform to enhance trade execution. Rootfinder developed product that allows traders to automatically search multiple sources of liquidity, find most favorable rates on both price and fees. It sounds like centralized 1inch to me, but call me crazy. And of course, they're going to be developing the Coinbase Prime Suite, which is aimed for financial institutions who wish to trade in crypto. So it doesn't help you and I, which is really sad, but I think that this is really good on the perspective of there might be another another company that comes in and builds it and basically steals the thunder from Coinbase. So Coinbase, you might be big, but be careful because you continue basically not supporting the group that actually fed you all the way to the top. Watch out when they turn on you and somebody does take care of the customers. You got to take care of the customers, folks. Otherwise, they will go where they're treated better. And it should go that way. Now, talking about treating better, let's go in and take a look around the world and the crypto stuff of what's going on, which makes me super bullish even further on the whole thing. Well, UK Finance Ministry opens consultation on regulating crypto and stable coins right after we have actually received some potential like, we're going to take your, wallets away here in US. And of course, people are fighting that. So that's, we're still waiting to find out what happens with that. And if it passes, it'll likely be challenged in the courts. So we've talked about that already. One of the things that I did want to point out is that the UK Finance Ministry is basically saying, hey, we need to regulate this puppy. You want to be a leader. So Her Majesty's Treasury, the UK Finance Ministry, has opened consultation on regulating crypto assets and stablecoins to support innovative and protect consumers. Treasury said the rise of crypto and stablecoins could pose similar stability and consumer risk as traditional regulated payment systems and will be regulated as such. Bitcoin and utility tokens are going to remain outside of this perimeter of authorization. However, they want to really focus on introducing a regulatory regime for stable coins. So this is what means for payment and so on. So that would be covering firms issuing stable tokens and firms providing services in relation to them. Algorithmic stablecoins will also remain outside of the scope of the proposals as they are not suitable for retail wholesale transactions. So why are they all petrified of stablecoins? Well, because it can take over their fiat currency. And of course, that's a coveted piece for a sovereign nation. As sovereign as it gets these days, I guess. Speaking of other sovereign nations, well, Chile is going the same route that US just saw, basically saying, hey, commercial banks, you need to account for services to crypto exchanges. So they are starting to open that up as the United States has actually allowed for the banks to actually run nodes, be on the public blockchains, and start transacting and settling in stable coins. Woo woo. Can we say a woo woo one more time? Now, jumping back from UK to Chile, we're going to go visit Finland because Finland is doing something that I think they're going to regret 5 to 10 years from now. They are selling 1,961 Bitcoin that they have seized back in 2016. So they're basically looking to cash in, and I think that they're making a grave mistake. It would have been much better if the government has purchased it and put it in their reserves, but that's just me. You let me know how you feel about it. Then we have the Euro stable coin, EURST, which is setting the path that major central banks now want to follow. And what's going on? Well, even usually closed-minded anti-cryptocurrency detractors are now forced to admit that digital currencies are an unavoidable reality. Dr. Doom, that's right, economist Nouriel Roubini, who is still calling Bitcoin crap, mostly because I don't know if the man just refuses to admit that he was wrong, or if he refuses to do research, or what his problem is. But whatever, he is basically now saying a big revolution is coming in the next few years due to many central banks launching their own digital currencies. So at least he's acknowledging that crypto is here to stay, and it is going to spread into every nook and cranny of the financial markets. So of course, that's kind of where things are happening, but he's not the only one that is flipping on his say. He's not flipping on the Bitcoin, unfortunately. So that's really sad, especially for the students that he teaches. But who knows, he might flip around, because we're seeing other people flip, and no other than former Fed Governor Kevin Warsh is also flipping on crypto, now saying he is very bullish on Bitcoin. Now that Bitcoin has actually breached its all-time high. So former Federal Reserve Governor and one-time Bitcoin skeptic Kevin Warsh says the top cryptocurrency is now a sensible investment. It's basically going from like you're a fool to go in, you're a fool not to go in. And finally, he's seeing the light at the end of the tunnel. Quote, I think that Bitcoin does make sense as part of a portfolio in this environment. He's also saying that Bitcoin is eating into gold's market share as millennials stake their place in the market. If Bitcoin never existed, gold would be rallying much more right now. But I guess if you're under 40, Bitcoin is your new gold. So thank you for acknowledging that stuff, and I do agree. Now, will these new millennials and folks under 40, I would actually argue there's people that are above 40 that are very bullish on this. So he might have missed it slightly, but I do believe that predominantly younger generation that is much more comfortable with technology and with virtual worlds and with online stuff is going to be much faster adopting this stuff. So we also know that they have taken over Robinhood, pushing markets ridiculously high in the pandemic era. And anywhere from sitting at home and not knowing what else to do, they started going in and trading actively. So will they push it? Mike Novogratz thinks yes, and I do believe that he is right. Young people's interest in speculative assets could funnel stimulus checks into crypto, as I have said, and people are already doing it, which is probably why we're seeing, to a degree, of a bit more increase in the prices. Is it a bubblicious market? Well, yes, potentially. He did say that one day we'll wake up and markets will be reversing. And when they do, they'll flip, and they'll flip really hard. And I think that that's an important piece for all of us to note. So don't put all your eggs into one basket, and do protect yourself. Because if you buy at 80 and we drop down to 40, you have gone down in your wealth 50%. So be careful with that, and that's the piece that can be potentially kind of scary if you are leveraging, especially if you don't have money to cover your leverage. So something to pay attention to. Now, he's also the same vein, Bill Gross, who is also known as the bond king of Wall Street, is saying that, excuse me, bubblicious stock market had young people and Robinhood to thank, so we could actually see the boost in it as you can go in and buy it. Now, buying on Robinhood, on the crypto, of course, you can do this. However, one of the pieces to pay attention to is that you don't hold Bitcoin. You just hold the derivative. But the same thing holds true if you are a large investor going into the Grayscale Bitcoin Trust. You don't hold Bitcoin. The Bitcoin Trust does. You have zero rights to it. You just benefit from the price. So it's a derivative, and you know, some people care about that. People in crypto care about that a lot. Many people don't. They just want to make money. So, you know, I right or wrong, we could argue here. I do prefer to hold an asset as opposed to derivative of an asset. But, you know, many people could care less. So they will jump in and making it easy to kind of get in and out without the keys, without anything. They'll end up doing it. So Bitcoin's massive rise has attracted media attention yet again. And we're seeing Squawk Box and Wall Street and all kinds of magazines starting now to talk about Bitcoin and maybe even Ethereum. I don't know. But, you know, youngsters are much more open to cryptocurrency. And of course, we'll see how it all goes. Now, here is the interest of what's been going on. This is what happened in the last bull market. This is what's happening right now. Bitcoin is now hovering over the 10th spot as a worldwide market cap asset, and the retail interest is still nowhere near its top. I think we're somewhere around here. So if that is the case, well, then this means that this will translate into something over here, which lets me know that, hey, things are yet to get heated and get very interesting. Google Trends' interest in Bitcoin is still half of what it was in the peak of 2017 hype. However, Ethereum is seeing much more interest than ever. Even so, you can see that it is basically breaking over the all-time highs before. They are definitely searching for Ethereum. ETH only has a fifth of the interest in Bitcoin. And then, of course, it's not even looking at anything else. The interesting piece in looking at what are the areas that are very interested in Ethereum, we seem to see some Balkan countries of all places. I promise not a bias from them, but we are seeing places from Albania, Kosovo, Slovenia, and then there's a few other countries, but like out of the top five, three of them are basically located on the Balkan Peninsula, interestingly enough. So I don't know what that says, but it's what it is. Y'all are going to lose your mind when a Fortune 100 company puts Bitcoin on their balance sheet, and it's going to happen, and I believe it's going to happen in 2021. Perhaps part of my crazy predictions that I'm doing now for 2021. Now with Americans waking up to a $600 checks, Novogratz and I propose the prices will go even higher, and we are just getting started, and I believe that's true. So why are millennials and Gen Zs intuitively buying coin? Well, part of it is they're much more comfortable with it, but I think that there's an interesting piece of what's going on. They know that they are kind of screwed. The baby boomers have eaten all the future lunches in lots of ways by building these giant deficits, and millennials are basically saying, forget you, man, I want mine too. And so that's why they're getting into it, and it's coming. It's coming, and more of them will come into it. Now, on the other side of things, before we get into some of the more exciting pieces and looking at the Glassnode and looking at the market analyst, this is an introduction. One of the things that was just published not that long ago, earlier today, is a drop is coming from a metric. So let's see if they're right, or if there's other things that we should consider that they're not even talking about this article, and I believe there are. Bitcoin's price nosedived by 17% on Monday. Of course, we've recovered considerably. We've came back down, hit well over 40. We came back down again, like 8 to 12%, and then boom, broke right over it. And all of this is happening in such a short period of time that if you're a long-time hodler, you buy it, you walk away, you might have been up, might have been down, wait 24 hours, and you're fine. So Bitcoin exchange withdrawals recently hit an 18-month high of 2,742.33. The previous high was observed on 5th of January earlier this week. And besides the withdrawal, the change adjusted transaction volume surged to an 18-month high. The increased withdrawal and transactional volume may also have a negative impact on Bitcoin's price, something on-chain analysts are debating right now. And so they're saying, well, based off of this, we're thinking price might go down. The withdrawals and the increased intensity of withdrawals may lead to a retracement that has been anticipated since the price crossed $30,000. And we actually did have a retracement, so I'm not quite sure what they're talking about, but perhaps they are saying it needs to, it only went down 20%. It should have gone down 30 to 40%. I think that the 30-40% are things of the past in the bull markets, because it's a different kind of bull market. So I think that there is a much, when we do have adjustments, they're going to be much sharper, much faster, much shorter, and not as deep. Not as deep. I think 20 to 25% might be the deepest ones. Again, I could be wrong, but that's how I see it. The positive here is that the only mid-level retailers are selling, while whales are hodling at the moment. Similarly, institutions have kept up the consistent buying, and combined effect of the two may lead into further price rise rather than contribute to the anticipated price drop. The trade intensity is dropping against the rising exchange withdrawals, and this signals an incoming drop. Inflows to fiat exchanges have risen, point to traders selling Bitcoin for high-performing altcoins. Chainlink and Stellar are an example of that and have registered much higher returns. Perhaps traders are looking to exchange Bitcoin for cheaper alternatives while looking for quick profit. And maybe that is the truth, but I don't know. I don't know that that's the case. Now, why am I saying all that? Well, it's time to get into some charts. So let's take a look at the charts and basically let's see what I am seeing. Now, what you're looking at over here is basically the logarithmic version of history of Bitcoin since the creation / tracking. And as you can see, we have kind of like a multiple levels that I have created over here. And, you know, looking at it, this bull market was basically like, you know, that was nothing. And here we go where we are. So when we look at the first sort of bull market from November of 2011 to like that November of 2013, right, we've seen some, you know, nice rises, kind of drops, and we did see a high above this sort of yellow line. Then we kind of came back down, and we've been flirting and following very closely this purple line right over here, the second tier, right? And which then led us into the second bull market, where we never actually even reached the yellow line, but we did break over the green line, maybe coming to about half, right? So I'm going to zoom in just a little bit so you can kind of see it. And now what has happened is we've come back down. We've broken over the purple line, kind of came back a little bit too soon, right? It should have probably followed here, but we've come back down and hit this orange line nonetheless, down to the, you know, 3,000 some level in March when the whole kaboom happened with COVID. So since then, we've kind of established a new bottom and started slowly to go up. And you can see that it was slight rise, but it was following basically this, still the bottoming part of the cup, and only starting to actually print green in October. So we've been printing green since then, since about $9,900 level or so. Right now we're 41,600 or so. So we've seen some insane gains, well over 4x at this point since October alone. That's a huge gain. That's quite important and interesting. But one of the pieces to kind of pay attention to is that if we look at where we have been, right? Sorry. Maybe? Will you do it? No. Where we have been is that this was December of 2017, right? November, October, you know, this is where January of 2017. So we were kind of here on this purple mark, and we still had this meteoric rise. Now, will it happen the same? Maybe, maybe not. Based off of my analysis, I think we might follow much closer to the 2013 than 2017, but I could be wrong. So right now, while the prices are insano a bit, we haven't even hit the green marker quite yet, or sorry, the blue marker quite yet. And when we do, if we do follow the same methodology, right, that should basically come in a few months, and that should be basically at about $70,000 per Bitcoin. It could come a little bit faster given the sort of the rise and the pace at which we are moving, kind of trying to catch up, but I could be wrong with that. So what I'm saying is we still have room to go, and you know, we could potentially, if we follow some of the analysis that I have done has to do with the angles and with everything else, we could hit 200,000 by the time we actually hit late spring, early summer, which is super insane, I know, but I'm looking at it because these pumps over here are also coming at a very low volume. I think you can probably see the volume here on the page as well, but as you will see that, you know, our volume right over here in 2013 and 14 was much higher, and the volume actually is dropping quite a bit. Even in 2017, the volume was much lower than it was in 2013, and we're seeing steady decline. So it's an interesting piece for me when I look at that stuff and I say, you know, I don't know, man. I think while we might have like a green candle or so, I think we're following this pattern right here. And if that is the case, then we're looking at potentially 1, 2, 3, 4, 5, 6 green candles before we actually, get a little bit of red, a little bit of pullback, and then that final big, ginormous crescendo end of the year kind of thing in a very dramatic way. Well, if that is the case, then we are basically looking to potentially come to almost 100,000 by the time, maybe even higher, by the time we hit summer, and then have a slight pullback, which slight pullback is going to bring us to maybe $50,000 to $70,000 level, and then kaboom, go on up. Again, could be completely wrong. I don't know for sure, but one of the pieces that I also wanted to share with you comes from the stock to flow ratio in the model. And right now we're kind of looking at where we are and what's happening with it when we take a look at it. And of course, we're looking at the glass node, and right now we are here. We are supposed to kind of come over to the top. It's going to surpass it. And it seems like we're moving a little bit above where we should be going. So that's going to be an interesting piece to follow. As you can see that the model right now is definitely on the interesting spectrum, that we are seeing a bit more breakage of what's been happening. So if we, let me see if we can zoom in a little bit. Let's zoom in a little bit. There we go. So that's kind of where we are. You can see that we're breaking above it, which is, okay, because if you look at the past, we have, we have gone above it. So not in the last bull market. In the last bull market, we didn't break above it towards the very end. This is the reason why I'm also thinking that we might be much closer following the 2013 bull market than we are the 2017, which leads me to believe that perhaps larger gains, much faster, and less volatility. So volatility wise, I think we're looking something closer to 2017, perhaps even less. But the gains wise, I think we're looking at 2013, 2014. Final piece that I think is also very important to acknowledge and to see is that the exchange inflow, we are seeing a bit more of a rise into it, potentially folks looking to cash in. I think that the next cash in section is going to come at about $45,000 to $55,000, where people might go in and do sell some, so we could see some drops over there. So that's something to pay attention to and prepare for. And let me change the screen so you can actually see the whole thing. And what I think it might also make sense to pay attention to is net unrealized profit and loss, NUPL, NUPL. We did see it go up 1.7% in the 24 hours. However, this is one of those things that as long as this puppy is, on the lower end of things, and you can probably see, can we see this? As long as this puppy actually remains on the, it's starting to approach on the higher level, but we're still not at that sort of top of the market. And all of it depends on how we are moving and how fast we are moving. So as long as we have some of these pullbacks that we have been experiencing, this is actually a very good and very positive thing. Now, I do want to switch over to take a look at Ethereum and what's going on in the Ethereum market space. So in the Ethereum, a chart is very, very bullish right now, in my humble opinion. It's been performing really well. As you can see, we've been kind of, going, we've been going parabolic, of course, as you keep on zooming out, but we've been climbing steadily. This is that, November sort of, and since then we have been going quite ballistic on up. But the new piece that I realized is that we're getting a bit more vertical, and there's a clear trend line that I have been seeing right over here that we've seen basically develop since early January, that we started to trade below. So we had it as a support level, as you can see on some of the ways. Then we flipped and it became more of a resistance level, now going kind of sideways on the market on Ethereum. And I believe in the short term that Ethereum does have a potential to actually go much higher. Let me show you. Let's take a look over here. The bit of a chart pattern that we might be seeing develop. Shorter term, longer term, right? So we're seeing a bit of a triangle, and it's not perfect, right? But we're seeing on the ascending side of things. So it wouldn't surprise me if well before the end of the month we do break above 14 something 1500, sorry, not thousand, on the Ethereum side of things. And we do have some very strong sort of support levels that might come at 11.9, 11.5. I don't think honestly that we're going below 1,000. It is possible. I mean, we do have support levels here with the moving average at about 900, and if that happens, that's going to be a super quick one. And I think more people are going to jumping in and buying, especially with the number of people researching Ethereum. I do believe that this puppy is going higher in a very short order, and thus far, it appears that Ethereum has been following Bitcoin in the big way. Final chart that I wanted to take a look at and share with you is YFI. YFI has been announcing all kinds of crazy new things coming in with version 2, leveraged vaults, trading. They have been acquiring and merging and doing all kinds of awesome things. And of course, the price action has seen that, where we've actually moved a bit in the last a few days. We did kind of come back down, hit the new sort of maybe local bottom, and are going back on up. I thought I deleted this. Hold on. Let me delete it now. Okay, so now what we're seeing is an interesting move with YFI. And we see a bit of a triangle pattern developing right now. We do have this support level that is coming in that we've obviously could provide us support at the high 27, 28,000. The longer it waits, obviously, the more the higher the price or the higher the level, and the more irrelevant it becomes. Of course, if we move down to the moving average, we could go down as low as 24 or 23,000. Again, still a potential, which would be a really big negative move. But I do think that we might not necessarily get there. And the reason for it has to do with the most recent pattern that I'm seeing here, looking at the 1 hour chart that we've seen develop over the last, 24 to 30 hours or so, that we're seeing sort of like a triangle starting to develop, where we potentially ostensibly would, if we would potentially go down from here, maybe hit this, and then boom, we should be going up higher. So I do believe that over the next few days we should be seeing YFI breaking above the all-time high that it had back in the summer. And for everybody's, see, this is me that didn't clean up. This is me that didn't clean up. Come on. Show it to me. Oh, no. well, I don't like this. Give like something that I can, work with. So as you can see, we did have a high right over here at about 43,900. That was this basically in September, and then we've come down since. I believe that we're going to break that and potentially go even higher from there. So that's a piece that I did want to share with you. In the final bit of news that I think it's important to take a look at is that you might know that Ethereum is pushing forward the proposal 1559. And why is Ethereum community looking forward to it? Well, there's a few different reasons. One is lower gas fees for the users, and the individuals are not overpaying for the transactions to go through. There are other advantages as well. One is the slack mechanism that will allow some blocks to be bigger during high congestion periods and other blocks to be smaller during periods with minimal traffic. So this sort of ability to expand and contrast as needed is the piece that they're saying that's going to make the fast transactions lower the fees, and it's not going to create this congestion that sometimes you can see, although we're not seeing it as much, I would argue, in Ethereum as potentially we might see in Bitcoin, the traditional method, right? But Bitcoin is still amazing, personally speaking. The EAP 1559 model would be removing the network security dependence on transaction fees by incentivizing miners with a more reliable perpetual block subsidy. And it's going to be supposed to be a more stable income for miners and instill better stability and security. So they're really going to start removing some of those components. Now, one of the pieces that they're talking about is the disadvantage might come down to miner sentiment because of the base fee and what they may or may not get, because the base fee is supposed to actually burn the fee that kind of comes in, which potentially could turn Ethereum into a deflationary attained asset, deflationary mechanism. And this, is kind of exciting for the investors. But if Ethereum, I think Ethereum just needs to decide, what do you want to be? Who do you want to be when you grow up? You got to make a decision, right? If you want to be sort of like a digital gold where it's been hodled, then the sort of the deflationary component when the price keeps on going up does make sense. If you're looking more to be sort of the security and the medium of exchange that kind of helps, of course, you can go up in price, but it's going to have to be sort of capped. And that's kind of what they're talking about. And they're saying, we do want this inflation to kind of go in, but, we want to put in limitations, because if Ethereum becomes unsustainably high and, people won't be able to pay for things. So in my humble opinion, I don't think that the gas fee is expensive per se. However, if you're doing a lot of things and a lot of analysis and a lot of different stuff, then the challenge does come in of potentially having a higher higher fees being problematic, and being problematic in such a way that not per se the gas fee is higher, but Ethereum is going up in value. And then when you compare it to the US dollar or the euro or to whatever crypto fiat currency that you get paid in, and you translate it into that, it becomes very expensive, right? So those are some of the pieces to put in, and they're saying, well, we're going to put a hard cap of inflation of 0.5%, 2%. Clearly, they hung out with central banks to come up with these numbers, and so they're saying, well, maybe that's going to be avoided to change the potential challenges of what Ethereum can and should do. The other part is that to reduce the gas fees and prices, it may not entirely do that. However, it will optimize transaction fees paid by users and avoid any form of overpayment, which happened during the DeFi surge of 2020. And a final bit of news, well, we are seeing some additional stuff coming in with some companies that are looking to solve real world problems when it comes to crypto. And it's a crypto tax automation startup tax BIC. It's drawing investment from PayPal and Coinbase. And of course, they have been on for a little while, but now they're actually looking to grow and develop, and they're wanting to expand. So of course, who is backing them? Well, fintech firms like PayPal, Coinbase, Winklevoss brothers are as well supporting them. So this is definitely going to be an interesting piece, and I think this is a very, very needed component. So congrats to them. And of course, tax time is coming, and these things are going to be incredibly helpful and useful to all of us. So there you go. Hopefully this was helpful to you. I hope that you have learned something new. I hope that you have enjoyed it. I do appreciate you joining me and listening and watching. Thank you so much. Do subscribe to the whole thing, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.